Welcome back, traders. Super excited to have a new guest that you guys have already seen repeatedly. You will know him from a variety of different places for his incredible work on seasonality and trading education, literally across the globe. It is my honor to reintroduce to some and present to others the incredibly dapper Don Dawson. How you doing, sir?
Thank you, Aaron. Hey, it's a pleasure to be here with you. What an intro. That's just not too high of a pedestal there, let me tell you.
Yeah, yeah, you know. So Don, I wanted to bring you on. We're always so excited to get your take on how the markets work, and we're always so excited to talk to you about current conditions. We've been talking a lot about the current conditions and how they're not really conducive to the way you trade. Can you elaborate a little bit on that for us?
Yeah, it's interesting bringing it up. I'm a swing trader off of daily time frames, for example. I don't day trade, so I'm looking to get onto trades. And for futures, I want them to last, say, 3 to 10 days, for example. But we're with everything that's going on in the markets right now. Everything from how much more is the Fed going to raise rates? What's inflation going to be? How are we getting all this excess money out of from COVID, everything like that. It's just there's so many variables out there today. It just seems the market is very nervous. And with the 24-hour a day news being available just like this now, markets just make a lot of knee jerk directional changes. So for a trend follower, for me, it makes it a little bit more challenging. If I was a day trader, I'm probably thriving in this stuff right now, but I just don't day trade. And I'm sure there's some day traders that are struggling out there too. I know some that are doing well, and I know some are struggling a little bit as well. It's just, I think it just depends on your style. I mean, for me, I kind of like a more of a set and forget, and manage to trade later on. But that's really, it's been difficult, to be honest with you.
That's exactly why I was excited to talk to you, because I'm one of those day traders that has been struggling
Yeah.
without this lack of a trend, right? So I guess that brings up a bit more of a more technical question that I'm very interested to hear your take on. When you define a trend, how do you do that? What are you looking for?
Yeah, I use technical analysis. It's interesting you bring that up because I believe as humans and traders, there's two styles of traders, and there's a left brain thinker and there's a right brain thinker. A left brain thinker is more what do you want to call it, like an engineer, basically, right? Technical, black and white, that kind of a thinker. A very analytical. That was the word I was trying to come up with. The right side, someone who thinks with the right side, is more of, I call it artsy, in the sense of they can look at pictures and see really good detail and make a lot of sense out of a picture. So if you're a higher highs and higher lows looking at a chart type of a trend follower, if you're a right brain thinker, that trend jumps out at you like that. If you're a right brain thinker, because it's like art that you're looking at, right? But you give it to a left brain thinker like I am, and I can sit there and turn the monitor in 3 different directions, and I still can't tell you if it's up, down, or sideways, because in my head, I have to have a definition of, well, what is a swing? What is a higher high, for example? Does it have to go 1 tick, 2 ticks, or does it have to go a certain number of points? What defines a swing? See, that's a left brain thinker right there. Right brain's not in that camp, right? So that's where I think the issue comes in. So I use technical analysis for my trend following. Moving averages is part of it. And, I just want something that gives me a smooth out direction that the market's trying to go. I don't use trend lines. I know some people do use them, but I find them a little bit more subjective. I think it's leaning towards the right side, if you will. But I'm more of a moving average type, I guess would be a better way to say it. And I'm just really using them. I'm not using them for support and resistance, but I'm really just looking for giving me an overall direction of recent market activity. And then I'll just look for, and for me, being a trend trader, I'm always looking to go, with buying in support or selling in resistance, but it's got to be with the trend. Like I won't trade against a trend. I found it to be much more forgiving, which is part of the reason for struggling right now because we're not really getting some good trends right now. So it's just a matter of sitting on
Right.
your hands and being patient right now and having some alternatives out there, to do as opposed to just trading this one strategy, or else you're just going to sit there and get yourself beat up.
Exactly. And I feel like a lot of traders, myself included, have been caught in that where we might have a really great uptrend. Obviously, we're up considerably since everything that happened this past October.
Right.
The measure for a recession when looking at the markets is, I think it's within 20% from lows. We're far beyond that in the S&P and the Nasdaq, but it's been whipsawy.
Oh,
It's
it
been
is.
kind of
Yeah.
hard to determine where things truly are and where things are truly supportive and where they're really resistant. So, at what point for you is a trend established? Do you need to see a breakout from this range and then that moving average just lean upwards a little bit more for it to be a definitive up trade?
Mhm.
What would you have to see to interest you to hop back in the market?
Got it. And for me, it's right now what I'm seeing, like with the moving averages and stuff, we're getting so much, like, and a lot of times we're spending a lot of time sitting on these moving averages or cutting through it. And just sitting there, and that's letting me know this market is very indecisive. So I'm kind of forward testing, if you will, as opposed to back testing. I got the strategy, but I need to forward test to see. I'm going to miss the first couple of good trades most likely, because what I'm doing is trying to forward test and trying to see, okay, is this market actually showing now that we're going to go somewhere? For example, the S&P, for it was like sideways for what, almost 2 months, 2.5 or whatever on a daily chart, and then we finally broke out of that and started an uptrend, and we had one little pullback on it, which was that's pretty decent, for that, and could have caught a ride on that. But before that, it was chop, chop, chop. But once we did do that breakout, it was like the moving averages started to give, like, I like to see like a 45-degree slant, and that's almost like a trend line, if you will, 45 degrees, and that's just more of a sustainable trend. If you get averages or trend lines that are going 90 degrees, that trend can't last like that. And obviously, if it's going flat, there is no trend. So I kind of like to look for around a 45 degree, and that'll give you, at least some form there's a direction for the market to go.
I hear you. And you've done a lot of work with a lot of different kinds of traders throughout your career from a coaching perspective. It How do you change that um, kind of strategy per trader? Like you said, the left brain and and the right brain
Yeah.
is definitely a really big part of it. But when you're teaching traders how to identify these kinds of opportunities, do you always suggest this forward thinking versus this back testing? I haven't heard that before. Forward testing versus back testing.
I do coming out of sideways markets, because it's just, when is the trend? The trend's sort of got to get reestablished before I really want to commit money to it, especially from a longer term. And day traders, or maybe intraday traders who are going to be in and out with maybe one trade a day or multiple trades, they're going to be on that trade much quicker than I will. But they're going to be out by the end of the day, and they're not going to. I like to look at it like I want to capitalize on the move after I get into that trend. So I might miss the first early part of that trend, but that's what I really like to do, is get into that sort of after a mature, not mature, but a trend that's shown it's got some direction to it. But trying to, when you're coaching or instructing people to do this, I definitely don't push one way or the other on them. I ask them, they've got to do this for themselves. Trend is one of the more personalized things of trading. And I think once you get trend under your belt, you got a better understanding or a better chance in these markets. But I always leave it up to that trader. And sometimes you can tell talking to them, if they are going to be a right brain thinker or a left brain thinker. Like, if when you ask them a question and it takes them, they go down this like long path of like, well, there's a, what do we call it? Like a moving average here. And it needs to go up at least 12%, or, that's a left brain thinker right there. You're getting the engineer side of somebody. And then if you got somebody over here who's sitting there going, well, it's going up, making new highs, and you can just see that lower high sitting right there where the buyers came in, and now there's new high and there's new buying coming in. And to me, I just see that the way that was explained as compared to the engineer style, that's just a right brain thinker. So, and there's nothing wrong with being either way. That's why I say I never let anyone make anyone feel like there is. It's what works for you. That's what you really got to bring to the market, because that's what you're going to be. That's what's going to pay you, is identifying that trend.
100%. And that's why it's so interesting to me, because I have always thought about trading from a right brain perspective. I have a ton of trend lines on my charts long term, ton of trend lines on my charts. And so the idea of trying to measure a trend technically using percentages and moving averages, that's so fascinating to me. It's crazy just how different
It is.
everyone can be in terms of their trading.
And yet in the end,
Is
we
there
can both end up making money on it, right? Because we're both going to say uptrend, uptrend. We got money.
there you go. Right. It's as long as everyone's making money, right? There's so many different opportunities to do so. In your experience, in that case, how many general rules of thumb apply to trading when you're teaching? What are the things that for most people are the same and that they can really capitalize on? Does that make sense? I'm not sure if that question makes sense.
Let's see. So I'm just trying to think. So basically, you're asking about like on a trend analysis or on or just trading as a in general.
In the bigger picture, because we talk about these things being left brain, right brain, that really informs someone's strategy, how they think about things, whether or not you're more creative or more analytical. But when you're looking at trading as a whole, the whole trading body, are there any things that you ever taught that were general rules of thumb that apply to everyone, or is the whole trading really need to be personalized?
Yeah, I got you. No, in that part, you almost have to get like figure out the personality type of the trader because if you've got and this is not being any bias or anything here, but usually younger traders want to be much more active, more aggressive in the market. So for them buying and selling breakouts, that's not a bad thing if they've got a strategy to do it. We don't do it on a whim, that's for sure. But if you have a strategy for it, they're more likely to do something like that. Whereas older people, as you want to call us, traders or whatever, we tend to want to buy stuff when it goes on sale, for example, meaning we want to buy the pullbacks or we want to sell the rallies. So we'll have that patience or that, okay, this is our style of trading. I know I can't buy breakouts or sell breakouts. I get like the nosebleed. It's like, well, if I'm going to buy it up there, why didn't I buy it down here? So, and breakout trader goes, well, when it was down here, you didn't know it was going to go up here. So there's always so many different sides to this. But I think it just comes down to the individual traders you're talking to them. And especially if you're in a classroom, you kind of got to feel the class out and you can almost separate the class into, okay, these are my momentum traders and these are my passive. Or if you want to think about like a passive and aggressive style trader. So passive traders going to be sitting on a bid or sitting on an offer waiting. Let me just get filled, just fill my order. Whereas the aggressive traders can be doing buy market, sell market, buy, that's their style of trading. And, I think a lot of it too could come there so familiar with video games and stuff and just being like constantly moving. That works for a while, a lot of times in trading, but sometimes you start to over trade when you get too aggressive like that in trading. So, if you're a new trader coming on, keep that in mind that, if you've seen movies like Wall Street and stuff like that, and they're screaming and shouting and stuff like that, that's not what every day should be like in your trading career. Because if it is, you're going to burn out too quick. You're probably going to lose all your money because that's really, I always told everybody too, it's like, my best trading days, I was bored to death. When I had like really good trades on, I was simply bored because
Right.
everything was going my way. There was no stress or anything. But the days where I was getting the sweaty palms and stuff, I was usually red. I'm sitting there going like, okay, this isn't good. This isn't good. So I found that most traders will tell you, especially professional traders will tell you, we spend more time waiting to trade than actually trading because we got to have a particular setup. It's got to meet certain rules, certain criteria. Then we execute the trade, but not before that. But when you're newer to trading, it's more about the adrenaline and the action, and you really haven't gotten any what you would call battle scars from taking really bad trades or bad losses or anything. So you don't have that.
Right.
You don't know what that pain is going to feel like after you've had that big loss. But once you've had that big loss, that pain will come back and remind you later on about don't do that again. So that's
Amen.
it's each trader is just going to have to kind of experience that. I mean, they can read books or we can sit here and talk to them all day long, but really until you go through that experience, it's really difficult to say, this is what it's going to be like. Because everybody, it's like when your parents told you something and they were much older and they were telling a much younger person this, and they're going like, you don't want to do that. I did that when I was little, and you do just the opposite. Is it? Oh, I just got to see what it was like, or just out of spite, whatever it was.
Right.
Traders are no different. If you tell them you shouldn't be doing that, they'll still sit there and hit the buy or sell market button. So, but eventually they all experience that pain that I think all traders go through of some kind of a loss that just got out of control, or maybe a series of them. And then if they decide, okay, this is my career, I'm going to start treating it like a business and not a darn hobby anymore. So, because that's the only way you're going to survive in this is managing risk. That's for sure.
100%. And you mentioned something there that I've wanted to ask you a little bit. I'm really glad you mentioned it. The whole experience portion of things is so important. You're a really patient trader, and I wonder how much of your patience do you think you built? Because when you originally trading,
I was
you're
not
trading
patient.
bond market.
Well,
Really?
we had to phone orders in and everything back then, and it was even more embarrassing because you had a human being on the other side when you were going like, "Hey, I want to buy or sell," and you had like 4 or 5 losses in a row, right? You were just on a really bad losing streak, and it was like sometimes you could just imagine when they heard it was me calling in, they would put their hand over the phone. Hey, Dawson's going long bonds, sell them. It's like they could make money going against my trades. So, yeah, I just when I was younger, I tell people I would shoot at anything that moved, and then after I got my head handed to me quite a few times, I was just sitting there going, I got to quit this nonsense. So that's when I started. I think again, I was a 5 year self taught trader, so my first couple of years, I was just doing every stupid thing you could think about, things that they're writing about today in books and online. Those are the things I was doing, but obviously we really didn't have it back then because my education was from something called a library, going and getting real books off of the shelf because we didn't have the internet and all this. I'm selling my father. You just didn't have this research, whereas today you do. And I think that it does kind of, I think, give you the opportunity to shorten the learning curve. You've still got a learning curve, don't get me wrong, but I think it does shorten it a little bit.
I'm so glad to hear that. To hear the great Don Dawson also struggled with impatience.
Oh,
That's fantastic, man.
I couldn't. I just, and it was kind of ironic because it was the same thing when I started to teach classes, and I told my friends that's what I was going to do, and every one of them was just going like, they just kind of laughed and go like, "You don't have a chance for this work. You have no patience. How are you going to put up with people?" And I tell you, I think from teaching, I learned a lot of experience or patience, I should say, and it was just you had to with adult education. I mean, that's all it was to it, and so that probably contributed to a lot of it too. But I think the main thing was back once I learned that you just can't trade every wiggle on the chart. Like I'm not going to catch every low or every high in the market. I had to wait for a particular setup, and if that setup didn't come, I wasn't to do anything. And that took a long time to get used to because I always had this feeling about I had to make money, right? And it's if you go in with that idea that you have to make money, normally you end up losing money. So if you just trade, like I keep a quote over here on one of my monitors that says, perfect the execution, not the results. And if you just really make your execution of your trading plan flawless as you can make it as a human being, the results will take care of themselves. And I know people have heard that story before, but it's the truth. I mean, you can't help but do. If you've got a strategy that's got, a 45, 50%, 60% win rate, right? And you got good risk management in there, and you just execute that trading plan flawlessly, you've got to accept there's going to be drawdown periods where you're losing a few trades, losing a little bit of money, but then you got to remember that on your winning trade, you're going to win more than you lose, and it's going to start the equity curve back up for you. So in every trader will go through an equity drawdown. I mean, I don't care who you are, how professional you are, how new you are, but every trader, even later in their careers, will go through a drawdown. So there's no escaping that. It just the markets are not an ATM machine, that's for sure.
Amen. Don, I really appreciate your time, my friend. I think that's a really great place to end the biweekly bites, man.
There you
What
go.
was that quote one more time? Perfect the execution.
Yeah, not the results.